Welcome, entrepreneurs! Today, we're diving into a unique and powerful tax strategy known as the Augusta Rule. Named after the city of Augusta, Georgia, where the Masters Golf Tournament is held, this rule allows homeowners to rent out their primary residence for up to 14 days per year without reporting the rental income on their tax return. For entrepreneurs, this rule presents an incredible opportunity to both generate tax-free income and reduce your taxable income, particularly if you host business events, meetings, or workshops at your home. In this session, we'll explore how the Augusta Rule works, provide real-life examples to illustrate the tax savings, and offer guidance on how to set your rental price and document everything for compliance. Let's get started. Let's begin by breaking down the basics of the Augusta Rule. Eligibility. To qualify, the property you rent out must be your primary residence. You need to live in the home for at least 14 days during the year. Rental period. The rule allows you to rent your home for up to 14 days in a calendar year. If you rent it out for more than 14 days, the income becomes taxable. But as long as you stay within the limit, the income is 100% tax-free. Tax-free rental income. The best part of the Augusta Rule is that any income you earn from renting your home for these 14 days doesn't need to be reported on your tax return. This allows you to keep the entire amount tax-free, giving you a unique way to generate extra income without adding to your tax burden. For entrepreneurs, this rule is particularly useful if you host business events, such as meetings, workshops, or client gatherings at your home. You can charge your business for renting the space, pocket the money, and legitimately reduce your taxable income. Let's look at a real-life example to see how the Augusta Rule can be applied. Meet Susan, who runs a marketing consulting firm from her home in Los Angeles. Every year, she hosts an annual retreat for her team, inviting her employees and clients for a 2-day workshop at her home. She rents out her home to her business for $1,500 per day during the event. And since the retreat lasts 2 days, she charges her business a total of $3,000. Because she's renting her home for fewer than 14 days, the $3,000 she earns from the rental is completely tax-free. Susan doesn't have to report this income on her tax return, but she can still deduct the rental expense on her business's taxes as a legitimate business expense. Now, let's take Tom, an entrepreneur who lives in a town that hosts an annual tech conference. Tom realizes that he can rent out his home to attendees for short stays during the conference. Since the event lasts 4 days, he decides to rent his home to a group of executives attending the conference for $2,000 per day. By renting his home for 4 days, Tom earns $8,000 in tax-free rental income. As long as he doesn't exceed the 14-day limit, he won't have to report this income, allowing him to pocket the full amount without paying any taxes on it. Now that we've seen the potential for tax-free income, the next important step is determining your rental rate. Here's the process for setting your rental price. Research comparable rentals. Look at short-term rental platforms such as Airbnb or local listings for homes similar to yours in terms of size, location, and amenities. Check what they charge for daily rentals in your area. Consider market demand. If your home is located in a desirable area or near popular events, like conferences, sports events, or festivals, you can typically charge a premium during those times. Document your research. The IRS requires that the rental rate you charge is reasonable and comparable to market rates. So, keep detailed records of your research, including listings and any comparable rates you find. Set your rate based on business needs. If you're renting your home to your own business for events or meetings, set a rate that reflects what you'd pay to rent a similar venue. For example, if a local business meeting space costs $1,500 per day, that's a reasonable amount to charge your business for using your home. By researching and documenting your rental rate, you can ensure that your pricing is both competitive and compliant with IRS regulations. When using the Augusta Rule, documentation is crucial. Here's what you need to do to stay compliant with IRS regulations. Keep a record of rental days. Document the exact days you rent out your home. If you're renting to your business, make sure to note the date, purpose of the rental, and the names of any attendees. Maintain written agreements. Whether you're renting to a third party or your own business, create a written rental agreement that outlines the rental terms, including the rate, dates, and purpose of the rental. Track payments. Make sure that all rental payments are clearly documented. If you're renting to your business, process the payment just as you would with any other rental transaction. Use a business account to transfer the rental fee to your personal account for transparency. By keeping these records, you'll be well prepared in the event of an IRS inquiry, ensuring you can substantiate your use of the Augusta Rule. Let's compare the tax savings from the Augusta Rule with the tax impact of standard rental income. In example A, Tom rents out his home for 4 days using the Augusta Rule and earns $8,000. Because he stays within the 14-day limit, the income is tax-free, and he pays no taxes on that $8,000. In example B, Tom rents his home for 30 days instead. Since he exceeds the 14-day limit, all $30,000 he earns from renting his home becomes taxable income. Let's assume Tom is in the 24% tax bracket. He now owes $7,200 in taxes on that rental income. By sticking to the 14-day limit, Tom would save $7,200 in taxes, making the Augusta Rule a much more tax-efficient strategy. In conclusion, the Augusta Rule is a fantastic way for entrepreneurs to generate tax-free income while leveraging their primary residence for business purposes. Here are the key takeaways. You can rent out your home for up to 14 days per year and keep all the income tax-free. Be strategic about setting a competitive rental rate by researching comparable properties. Document everything, including rental agreements, payments, and the purpose of the rental, to stay compliant with IRS regulations. Consider hosting business events or meetings at your home to maximize the tax benefits and create legitimate rental opportunities. Thank you for joining me today, and I hope this session has given you valuable insights into how to use the Augusta Rule to boost your tax savings. As always, consult with a tax professional to ensure you're maximizing this strategy while staying compliant with the law.